Hello, Oracles. Today I'm going to give you a breakdown of all of the dividend payouts I received in the month of August. So this is not for me to brag or anything like that. This is going to be one of those things where, and you'll see I don't make a lot of money in dividends right now, but it's a way to, one, track my own progress in video form and show you guys in real time what the snowball effect can do. Right now I'm not adding much to my portfolio from the outside because I have a lot of other expenses. I've got the house I'm paying for, I've got college I'm paying for. So I only put in $50 every single week. So most of the growth I am seeing in my portfolio is strictly from dividend payouts on a monthly basis. So that's what I want to start here today. And I could do a video if you guys want that kind of shows you the progress I've made over the last year. But today I'm going to start, and I'll do this every single month at the end of the month so we can track along the progress that I have been making so you guys can determine if maybe dividends are a way that you want to go, but you're not really sure. You can kind of see how the progress goes when it comes to dividend investing. It's definitely very slow. It's not going to be a get rich quick kind of scheme deal that's going on here. Obviously, the more money you put in from the outside, the faster it's going to grow. But I really want to show you guys how it just snowballs, and over time, how you can build up that really solid passive income that's coming in from a truly passive place. Yes, you have to work hard now and you put that money in, but as time goes down the road, you don't have to worry about it. Real estate, you may be able to make more money passively, which that's one of the goals that I'm focusing on, but you still have to put in the work as a landlord or pay for other expenses that are here. When it comes to dividend investing, it truly is passive. I do a little bit of work when it comes to just making sure the companies that I'm invested in aren't going under or they're not cutting their dividends, little things like that. But realistically, it's not all that hard. So today I'm going to break down for you what I brought in for the month of August, company by company, ETF by ETF. All right, so I'm going to go right in order from top to bottom, and my spreadsheet is broken down by highest yielding at the top when it comes to these very high yield companies. So CONY is the first one on my list. I got paid out $50.31 this month. Last month was $86.53. These are very volatile. Some months are really good, some months are not so good, but the yield is still significantly higher than everything else that's out there, and I still have a positive total return. My all-time total return is $1,900. I have a 200% all-time total return. That does include sales that I've made of making profits on them, because right now the ETF is at $15, but at one point it was pushing $27. So I sold off a good chunk of that for major profits early on, and I'm just kind of riding out right now whatever it's bringing in for dividends at this point. Next on the list is QQQY. I brought in $41.71. That is up from the $36.15 last month. Now, I only have 16 shares. They did a reverse split. I used to have 50, so they reverse split down to 16. But that also meant that the dividend was going to reverse split. So last month it paid out $2.50 per share. And my all-time total return for QQQY is about $410 or 47%. Next on the list is JEPY. That is also a high-yielding dividend ETF. That brought in $27.91 this month, which is up from the $25.40 last month. Now, my all-time total return on this is just under $300 or about 34.5%. Next on my list is KLIP, and this is one I'm contemplating selling out of. It really has had some NAV erosion along the way, so I only brought in $18.96 from it this month, and the stock price has been continuously going down as well. And the only reason I haven't sold out of it yet is because I am still positive on it with almost $180 and a 21% total return all time. So I'm contemplating selling out of it and just kind of leaving that money in cash or putting it in other places in some more stable stocks, because I don't really want any more of these very high yield ETFs. Like, they're great for income, but honestly, they're so volatile, it's hard to go by. I kind of want to put something in more stable. But those are just my thoughts. I haven't decided what I'm going to do. But again, I'm still positive on this with a 21% return. It's outpacing the market, so I can't complain. And last on the list of these high-yielding income ETFs is going to be YMAX 2956. Now, this one here I got into much later. I got into that just a few months ago. So for me, I have 50 shares of that, and my all-time total return is just under $70 at about 6.75%. So again, this one here isn't that great, but it's kind of more stable and consistent, and the NAV erosion isn't as bad. So this is one of the ones I'm monitoring, but all of these here are strictly for income. I'm not adding any more to these positions. I do not drip that dividend into these ETFs. I'm just using that money that's coming in to funnel into all of my other plays that I have down below. And eventually, I will end up getting rid of these once all of these other ones down below surpass the income I have coming in from these very high yielding ETFs. All right, so moving on down the list, and I'll go through these a little bit quicker. I have SVOL. This is the one that shorts the volatility futures. I mentioned that the other day, brought in the exact same amount as last month at 22.45, and my all-time total return is at 18%. Next, I have QQQI. I brought in $18, which is up from the 17.22 last month, and my all-time total return is just under 6%. Next is TLTW. This one brought in 14.45, which is also down from last month at 18.18. And my all-time total return on this is 4.5%. Next is SPYI, bringing in $15.91. This one has been growing very nicely for me over the course of the year. Last month it brought in 14.55. Now we're at 15.91. And all-time total return on SPYI is 12.75%. This is one of my favorite ones that I currently own. Next on the list is HIGH. Brought in $8.06 last month, $9.54, so I'm down from last month. This one here is one that may be on the chopping block. Haven't decided if I want to keep it or not. And my all-time total return is basically flat. So kind of taking a look at this one, you see a blank down here with PFFA. I kind of want to add to this. So I may end up selling this one out and moving that money into PFFA. If I do, I will keep you guys posted on that. Next on the list is JEPQ, another one of my favorites. Brought in $10.63 this month. Last month was $9.15, and it has been growing nicely. Had one little spike here in June. It's a little more volatile, but we've been moving up over time nicely. And my all-time total return on that is just over 11%. Next payout is HTGC of $32.26. This one here does not pay monthly. This one pays quarterly. And last payout, I got $29.74. So a nice little bump up there. And my all-time total return on this one is about 14.25%. Next, we have AGGH, brings in $8.45. Up from last month, but still down from the high of $10.97 in June. And my all-time total return on that is 4.5%. Now, some of these ETFs are based on bonds, which we know that the bond market has not been great. So that should turn around and help these perform better. So I kind of want to keep some of them because even though they seem like they've been underperforming, if we get into a recession, which I'm anticipating, they should outperform. Next on the list is JEPI, another fan favorite that's out there. This month, one of the lower months at $6.26, but it stays relatively consistent and it has equity appreciation. So that's a nice little feature on the other side of it. And you can see that here with my all-time return of almost 15%. Next up is Hess Midstream, HESM. This also pays out quarterly. This was the highest quarter I've had so far at $22.44, up from last quarter at $21.50. And my all-time total return on Hess is just over 11%. And this one here has grown just slightly from last month, just up 3 cents to $6.07. And you see the 13.29 and the 12.02. This is because Maine pays out special dividends on a regular basis. So this here isn't just because all of a sudden they cut their dividend. This is because they actually added a lot extra in this dividend. So you get a lot of extra bonuses over the course of the year. And because of that, the all-time total return for me is just over 17.5% on this. And another big one, which is one of my best REITs that I have, which is known as the monthly dividend stock, is going to be Realty Income. This one here is now up a little bit from last month, so it's been growing nicely as the year has been going on, up to $5.70. Plus, it also has a lot of nice appreciation. Being a REIT, this is a company that had the stock price suppressed significantly as the interest rates went up, because that's what happens with these companies. And then, of course, now that we see rates are about to get cut, it has been moving back up. My cost basis on this is at $53.48. And today we closed at $62. So I'm up $10 per share on my 21.75 shares. And so my all-time total return is just over 20% on this. And last on the list for my stable income ETF plays is going to be Devo. This is an ETF that pays out monthly. Got paid $4.93 this month. Again, you can see it's been growing very nicely for me over the course of the year. And this is kind of how the snowball works. It looks like it's little incremental growth here and there, but then it starts to grow bigger and bigger. And then as you start to put more money into that ETF, you're going to start growing it bigger and bigger. And it just keeps on snowballing over time. And my all-time return on Devo is just over 11%. Now we're going to move down to my individual companies that I have. So this one here first is going to be AbbVie. AbbVie paid out $3.91 for me this month. Last quarter was $3.73. Now, one of the things when it comes to these individual companies and stocks is it's much different than those ETFs. These here, I'm looking for a lot of different criteria. I want dividend growth. I want stock price appreciation. I want free cash flow growth. I want this company to be something I can hold long term and get stock price appreciation along with income growth that's going to outpace inflation and keep on growing that income from there. I'm not necessarily looking for a high yield. I am looking for something that's going to be growing long term over time so that I'm basically getting bigger and bigger raises from these dividends than I could have ever dreamed of getting from a job. And so with AbbVie, that proves to be one of those. My all-time total return right now is at 16.6%. Next on the list is Starbucks, and I do need to update this. I apologize. I do have it split between two different brokerages, and I have not gotten my other brokerage added in here. So it will be higher than this $3.27 that I had last quarter, but I just need to add that in. And now Starbucks did have some rough times this year. It went from over $100 a share down to around $70 per share and has now pushed back up due to them taking the CEO from Chipotle. So with them being where they're at, I am still at an all-time total return at just under 10%. Next on the list is Procter & Gamble, a tried and true dividend king that has been raising their dividends for over 50 years. So this quarter brought in $2.64, just 1 penny above the $2.63 last quarter. But again, these are the snowballs. This is just a little bit of growth I'm looking for. And again, I will be adding to these as time goes on, and it'll keep on pushing that up. And especially going to a potential recessionary time, I want to be in that company that's going to be a consumer staple, that's not going to be volatile, something I can trust. And again, Procter & Gamble, I'm up all time 12%. Next one is going to be Cat. And again, this one is only up 1 penny from last quarter. So I'm at $1.48 versus $1.47. But my all-time total return on Cat is 15.3%. Next on the list is American Express, one of my favorites that are out there. These credit card companies are amazing. This one here is up only 1 penny from last quarter. So again, that's slow growth. But my all-time total return on American Express is almost 37%. So again, looking at total returns, yes, I am growing income, but I'm also growing that total return. I'm growing that stock price appreciation, and it's going to make my portfolio even better in the long run. Because if I ever wanted to get to a point where, hey, maybe I want to trim some off of this and put it into something else, I have gotten all of that stock price appreciation and much better returns than just strictly income. And last on the list is Apple, matching the same price as last quarter at a 61-cent payout. And Apple, my all-time total return is just under 31%. Again, another incredible return. So overall, all of my dividend payouts for the entire month are $357.85. Again, that's going to bump up a few cents because of Starbucks, so it'll be just over $358 to end the month. Now, comparing that to last year I brought in $275.44. So this is a 30% increase year over year when it came to my dividend income. So that is a 30% raise that I got over myself for last year. Now, year to date, last year I brought in a total of $4,226.74. So far this year, I brought in over $4,500. So I'm already up 6.5% over last year when it comes to my income that I made from dividends. Now, this does include the interest that I have made when it comes to my high yield savings, or last year when I had those bonds, and when I had those bonds rolling month to month, they are included in here also. So last year, even with all of that added in, I am still 6.5% ahead, and we still have 4 months left of the year. So those are all my payouts for the month of August. And if you guys want me to go, I can go back and do some breakdowns of the previous months, or I'll do a full breakdown of last year and what I had seen there. But I kind of wanted to make this record to go forward. And at the end of September, I will do the same thing and show you guys what I brought in. And what I'll do next month is I'll add all the interest I have brought in from cash, because right now I'm still getting 4.5% back on my cash that I do not have invested through SoFi. And that's making a significant chunk of interest coming in. And because of all that interest, that is more income that's coming in. And as we go through time and the Fed comes down on interest rates, and I end up getting lower interest rates coming back from SoFi, I'm going to shift more of that money into these dividend plays to kind of increase that dividend over time and balance that off. So again, just kind of taking advantage of opportunities. I want to have that cash ready. Don't know what's going to happen during the election cycle. Most likely we're going to have a big sell-off. Don't know if we're going to get into a recession in 2025. Either way, I want to be ready for this. So I've got my plan set, which I've shared with you guys previously. And I just want to make sure that I'm putting my money into places that are going to grow my income the best over the long term. So that's all I've got for you guys today. Thank you so much for watching. I hope this provided some good information for you guys. If it did, please hit that like button down below, and I'll see you in the next one.